So how do
Because
they get into that story? Is that via REITs? If they say that, okay, if economic growth is coming back and office occupancy is rising, and say I as an investor want to kind of get into that growth story, are REITs the option for investors to go with?
absolutely, it depends on basically you want to have a physical ownership of the asset, or maybe there are smaller quantums to deploy. Look, today basically you want to spread your risk. So we are living in a VUCA world. That's what we've heard on this panel as well, or since morning in the past. And we are witnessing wild swings in the stock markets and everything. So maybe people want to kind of spread out their kind of, let's say, capital into various assets. So REITs definitely is a good avenue to park money. And it's like a tradable asset, like it's a stock where you just need a demat account, and one can trade, and you have the flexibility of getting your money back in a period of 1 day, which is not possible in a physical asset. So yes, REITs definitely is one of the key maybe kind of avenues to look at. And people are kind of maybe kind of targeting a blended double digit yield over a period of time, which includes dividend appreciation, mark to market, exit yields, etc. So yes, yields
Hmm.
is there, and I'll take a minute more, Gautam, to explain. The another area, which is fractional ownership. This is a very new concept, where earlier you had to just basically own real estate, and that basically involves a lot of capital. So today people can look at as small as 25 lakhs and maybe take a stake in an asset, right? You are a part owner of that asset. And that concept is called as fractional ownership, which is matured in established markets like the US. And it's picking up a lot in India. So I'll talk a bit more about that later. But these are the two things which one could look at besides physical ownership of the asset.
Absolutely. It's not just a static option when it comes to investment. New modes of investment are also coming in: REITs, fractional ownership. So if you're thinking real estate, there are options for you to look at. Let's also expand the conversation to look at what are the options for retirees from the ever expanding funds universe. So Suraj, let me bring you into the conversation for this. Could you throw some light on, say, flexi cap funds and large cap funds, and what are the advantages of this particular fund category from the point of retirement investing and post retirement wealth creation?
Yeah, so thanks, Gautam. And I think, this is a very good question. First of all, when it comes to retirement, most of us really don't think about equities in any significant form. But the reality is that, as Joydeep also mentioned, that it is important that we think of some exposure to equities so that we keep ahead of inflation. So the good news is that SEBI actually created a product classification for equity products, and that has given us, a tremendous insight on the kind of portfolios any single fund manager can really create. So obviously in retirement, when you're building into equities, you would like to, take exposure to equities which are relatively conservative in nature. So this is where large cap funds, come in very well, and of course a subcategory there of index funds can also play a big role. FlexiCap, as the word itself describes, allows you to participate across all market capitalizations. So instead of you trying to figure out, what exposure you want on large cap or mid cap or small cap, you let the fund manager really, take that decision. So you can use a FlexiCap concept as well. And within that, we also have a multi-cap as another category. So what really has happened is that over the last, few years, we have, especially the last couple of years, we have seen a tremendous increase in terms of the number of products that have really come into the equity categories as well. So some of them, of course, also look at investing into overseas equity as an asset class as well. And so if you want to participate, let's say in technology where US has been very dominant, so you can participate, through these fund of fund structures, which are available in the Indian market.
All right. And in terms of, say, a conversation between someone who's close to retirement and the questions that they should be asking, say, their financial advisor in terms of structuring for that retirement and post retirement paradigm, what do you think should be some of the talking points between the investor and the financial advisor?
So Gautam, that's a very relevant and a very important question. So see, I have dedicated myself, to the subject of retirement. And so I would say there are two aspects there. One of the aspects, of course, is what I call, which belongs to the investing world. So when we talk of diversification and any other associated concepts, which are more technical in nature. That's the investing world. But more importantly, to get investment success, the behavioral part becomes extremely important, right? So if you don't really have your behavioral part under control, it's unlikely you'll be successful as an investor, irrespective of your age group. So it is not necessarily applicable just to retirement. So one of the key learnings that I really have had is that when you transition from a working profile into retirement, whatever assumptions you carry with you, right, are going to have a deep impact on the investment performance. And let me just illustrate that with an example. So for example, we talked about capital preservation. So if you believe capital preservation comes from lack of erosion of your capital, then you're bound to have bulk of your investments in short-term debt. And eventually what you realize is that inflation will kill you. Similarly, if you have been very successful as an investor and have made lots of money in equities in your career because you've been investing there, you've also participated in private equity, you've done everything, and your assumption is that, yeah, actually equity plays out well in the long run. Now, what happens if we are into a Japan-like situation where equities went nowhere over the last 40 years? So both those assumptions can hurt you very well. So when you're conversing with your financial advisor, I think the most important conversation you must have is, what is the most appropriate asset allocation, and what are those assumptions that you should be carrying in as you get into retirement. And I think if you get that piece right, chances are that you will have a fantastic retirement.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.